you can really see, I think crowd psychology is really a huge part that really plays, I think, especially a lot in, in trading, and especially in, I think, in crypto is a very special way in terms of how crowd psychology is being played, especially if you see the power of the crowd on Twitter, when, when you see Bitcoin start, bouncing quite a bit, and then you start seeing crazy six-figure targets that starts coming out, and one person says it and the others, do so after that. So it's really quite interesting to see how people sort of, it's like a domino effect that people sort of are, very swayed very easily by markets, just by some bounce, and how, why by one, a few people posting it, that it triggers others to post similar stuff as well. But I'm not saying that, Bitcoin won't go to six figures. I don't know. It can happen, definitely, for sure. But it's just showing you typical, like, human behavior. And there's, a couple of reasons why people are drawn, to this overwhelming power of what we call crowd. And first, probably the strongest feeling which really drives these financial markets, but that's also something that's really hard to overcome, is greed, right? Greed has, led many people keep thinking that we will go higher and higher when we hit, the highs of 60K, and 65K, and it has led many people to, burning their portfolio, even though they may have, had really nice gains throughout that run up to 65K. And it requires a lot of, trading experience, and especially discipline that could overthrow it, right? So, but a lot of, human behavior and analysts have actually found that people, experience greater fear of missing an opportunity for profits than the possibility of losing their life savings or whatever they have put in their portfolio. So yeah, it's a very interesting phenomenon that is how people think about it, right? So, but many people also fear that, if you have a different opinion, a contrary opinion, by doing something different, then you will make a mistake, and you're not, following the crowd, I would say, will fail, whereas others, could succeed. So that concern of, failing behind, other traders that you see, or perhaps on Twitter or whatsoever, or your friends or any other, other competitors or traders, is what drives many people to act as, the mass, and, what we call crowd psychology, so that if they lose, right, others will lose as well, and this won't matter as much. It wouldn't outstrip them. It's a very funny way of thinking, but it's also, I think, a lot comes on it, especially if you come from more a collectivist culture. So when you're more about, communion, people, come together and go together with the herd, this can also influence your decision making as well in, trading. Don't mistake that. And most of the books maybe you read on trading and stuff like that also really advise, really new traders to really just follow the trend and not, fight the market in order to, last longer in the market. But yes, it is true that, following the trend, especially certain coins that are trending in the market right now, especially, what has been trending the past few days, things like Com, Luna, or Rune, for example. Yeah, you saw that it just kept going up and up. And if it works for you, when you are able to, manage your risk and are able to plot your support and resistance areas and where you will take profits, well, yes, it can work very well in your favor. But if you do not have a plan and have a trading system that works for you, and you just start following the crowd behavior blindly, it can be devastating, as if you are going up against a market, especially where whales really love to prey on, you can result in a loss if you don't manage it well enough, right? So it can also, again, it's the greed that perhaps gets to you when you see your portfolio perhaps rising a lot with trending coins that you have been in, and then you just fail to take profit, only to lose it all when the market suddenly takes a turn when you least expect it to do so. And yes, by default, if you are rather new to trading, you should always enter positions in a trend direction. But you always need to follow really, really proper risk management strategies and really minimize your risk. Have your stop losses ready and avoid going far too heavy in your position size. In order, because you want to persist in the market and not perish right in this market. And from there you then you can only learn. And I'm not going to say you're not going to get hurt along the way and have losses. It's necessary and it's part of trading, and it's something that you have to endure to really grow as a trader as well, and myself included, right? I had to endure many losses before you start seeing those gains consistently come in. So and the other thing is really another powerful motivator behind this kind of crowd behavior. It's people's tendency to look for what we call a leader, which is really quite normal, right? If you think about social creatures, right, we always look for someone to take the lead, whether when we were back in school or maybe at work. Leadership, right, can be found really either in a single person or a group of individuals, or just could be just the majority of what the crowds think and what the majority thinks should be right? And people look for a leader to guide them, especially through times of uncertainty. With Bitcoin right now as well, is it's going up, is it going down, is it choppy price action? People start turning to someone that they perhaps trust and feel that they can follow to really help to guide them in this uncertain times. And especially, and that can be also found, like when you have lots of crypto Twitter influencers that who perhaps are bullish constantly or bearish constantly. And this can really also affect your judgment if you sort of zoom in too much on and really follow and take word for word what they say. And what I'm saying, I'm not saying that what they say may not be right, but you just have to, you yourself, take ownership and conduct your own proper unbiased assessment, because your money is at stake. Many after that starts blaming influencers for losing money because they just followed blindly without doing their own research or TA, and say that it's their fault that they lost money. But you have to think about it, that at the end of the day, you were the one who pressed that button to buy or to sell, and nobody actually did it for you. And that's why, especially in terms of this uncertainty, especially in this period, you have to be especially cautious about blindly following whatever people on Twitter are saying, and then influencers, right? Because the market can really change so fast and turn so fast on you that sometimes you can be caught off guard, and even that you have to be prepared for different scenarios that could take place. And so always do your own homework and really challenge yourself when you are also doing your TA. And what helps for me is I always try to refresh the charts and then just look at it from a fresh perspective every day, and just chart again, and so that you will try to be a little bit more unbiased about your take on the market. And try not to make like Twitter be the first thing that you go in to check on what's going on, because this can also influence your take and perception on what's might happen during the day in the market. So it's best to have when you are ready to start your day, to do your own analysis and try to form your own judgment of what could happen and be prepared for the scenarios, than to dive straight onto Twitter, which could sometimes really cloud your judgment and bias your TA towards, aligning towards theirs, for example, other people on Twitter. And the thing about crowd psychology is, let's say if you see a famous influencer that perhaps also aligns with your TA. Perhaps you were not looking at this influencer's work previously, and you were just doing your own TA and thinking where it could go. And if it aligns with what you say, you can sometimes be so sure of your TA, just giving you that false sense of security and raising your own confidence in the TA that you do. But we need to take into account that this can strongly cloud your judgment, because you need to remember that sometimes taking a trade, it's really all about probability, and you need to keep that in mind, that probability of going up and going down is there. Of course, you take on a trade where the risk reward ratio is in your favor, mostly, but there's also a chance that the market can turn on you with that split second, and you're unable to react when that happens, right? But you need to be prepared when that happens. So, and that's why sometimes I feel that crypto Twitter is sometimes very toxic, in a way that we tend to rely too much perhaps on others because of this crowd psychology, thinking that this is where it may go. But and then you start getting a little bit lazy and not start thinking for yourself. And what we need to do in trading is continuously push ourselves and every day challenge ourselves to say, like, okay, why would this scenario not play out? If you are bullish, why could it not play out? There is always perhaps another bearish stance for it, and you always need to really justify your reasons if you want to go long in a certain trade, and continuously ask yourself and check back. A trade setup can look really good in the first instance, but only look really bad after, when when a turn takes in the when the market takes worse plunges down. So just always have be prepared and be able to pivot whenever the market is not in your favor, right? So, and yeah, I know it's not easy, succeeding with such a strategy. Perhaps maybe sometimes sometimes they say, okay, you should go against the herd. And when it comes to crowd psychology, when everyone's being bullish, you should be bearish. But it's not that easy sometimes, especially when market movement is also supported by a stable flow of supporting fundamental indicators, and then it carries also a lot of risk. And you're fighting against more professional traders who have bots and institutions that are whales, they have their highly sophisticated bots that can help them detect the market and are a lot quicker than our human mind and brain, right? And so then if I'm saying that sharing the crowd behavior could also maybe lead us to losses, and also following our own well-analyzed decisions could yield profits with high degree of risk, what strategy should one use, right? So I mean, the answer is quite simple. You follow the crowd when something is trending and it coincides with your own established trading strategy, and you just get out of the trade as soon as the market turns on you. Never forget to take profits at certain areas, and always leave a bit of a moon back, so that you are less likely to want to FOMO back in when it just goes higher and higher. You never know when how strong a coin can trend, just because there's perhaps maybe news that might be coming up to support that as well. And we can also really see that in if I talk more about how crypto Twitter and how this is quite funny with the market. I'll just share the charts. Uh, Sorry, just give me a minute. Yeah, so if we were to look at the part where Bitcoin was on the rise back in since yeah, January, December, and going up and up all the time, you can see that news was just bullish and bullish and bullish all the time. And then when we were at 65K, there were many people calling out for some really high targets, such as 200 or 300 a K. And then this everyone is in such a euphoric state because they were probably making so much market money that you are more likely to believe is what's being said, that okay, we're not going to stop here, we will just go on and on. And sometimes it's just this idea that I have, that sometimes in whales really love to prey on what the common consensus is on Twitter, when everyone is overly bullish, that they start doing a rug pull and then trick you into thinking that we could go higher here, only to make a higher low, and then we had that plunge over there. And and then you see people start all the bears start coming out, being extremely bearish, especially at these areas of support, where we can see that there's lots of support, and then bearish news just keep coming on and on, and all the FUD that just kept coming on and on. And the bears were just going to say that, and people were very sure all the bearish charts start coming out and say that, okay, we will go to 19K, 20K next and whatnot. Only again for whales to prey on that crowd and what the majority retail traders are thinking, and only to turn it back up, and and people start being in disbelief and start going up. So it's just a really strange it's just a really strange thing that really whales really love to play on our human emotions, and to just do it in a way that so skillfully, that because they are able to deal with their algos and stuff like that, that it's I'm not sure if you're actually seeing my chart. Yes, okay. That they're able to manipulate and make the chart looks like certain patterns due to the algos, to make it look like it will go in a certain way, to make people believe that this is where it's heading to next. And even with the latest things with when we saw the pullback Bitcoin had recently, and then people start being all the bearish charts really started coming out. I really noticed that around here at support, and thinking that we will go down a little bit further, which would make sense because this is a good support, and people would think that it sounds there, but only again for it to just hover around the price and make people thinking, okay, we are going lower and lower. But crypto to everybody were waiting for 36.3K at that moment, and only for it to also again go back up. And again, people were starting to get euphoric at resistance, and bullish charts start coming out, and then it took a tumble almost back to where it begins. So it's just a lot of preying on how human psychology and how our emotions, and it can be really hard with trading such choppy price action. And it's really hard if you manage to snag get a really great entry on altcoins or whatsoever. I highly suggest you to just take profits consistently, because you don't want to give back all the profits back to the market. And we always say you never lose out taking profits, which is so true. And you want to be able to every time something happens with Bitcoin, you always see a new coin that pops up that's a little bit more bullish than the rest. There's always one coin or a few coins that does that holds well and starts surging up. And you always want to have that capital to be able to play that particular coin when that comes about. So and that's how you slowly grow your portfolio at the same time, and not just get hyped up in the same coin and keep thinking that your coin will go up further and further if it has hit stop loss, for example.